Agile, and IOVC.
All right. Hi, everyone. Welcome back from lunch. I know a lot of you are still recovering, so we'll try to keep this really interesting and fun for everyone. So first of all, really excited to have all of my fellow panelists here with us today. I think you are all in for a real treat because regulation is a particular area that has been very ambiguous for a lot of startups, entrepreneurs, and just investors more broadly. So I think it'll be great for us to really go through some of the key issues and clear up some things for everyone in the audience. So before we get started and delve into specific topics, I thought it would be helpful if we just give you all a brief intro of all of our backgrounds so you have a little bit more context as to where we're coming from. So I guess I'll start very briefly. My name is Shuo. I am a general partner at IOVC and Agile VC. We're mainly early stage enterprise focused fund. Outside of this, I'm also the CEO of a nonprofit called Shinect, which a lot of you might know about. Shinect stands for Share, Inspire, and Connect. And we're a community of about 4,000 now engineers and entrepreneurs. And so we've hosted a whole bunch of events focused around crypto, part of the reason why I got asked to moderate this. And my business partner and I have been following the blockchain space for a number of years now. He actually invested into Bitcoin before it reached $30. So he kind of got the head start in this. He tried to convince me years ago on this, and I was doing a guest lecture at NYU. And the professor was like, you know, Bitcoin is never going to reach $30. So I didn't end up investing. And so now he's always like, I told you so. But beyond that, I went to law school by training, never practiced law, but always worked on the investing side. So it would be great to learn from all of you about the regulatory side of things. So please, Grant.
Hello. So my name is Grant Fondo. I'm a partner at Goodwin Procter here in Silicon Valley. I'm head of our global blockchain and digital currency group. I'm also a former federal prosecutor here in the Northern District of California. So I got involved in this space about 4 years ago on the regulatory side. So I've represented a number of companies with DOJ matters, SEC, FinCEN, also represent Coinbase in its battle with the IRS. An order just came down recently in that. But more importantly for today's presentation also, I'm head of our group that does token sales and basically ICOs. And so we've been handling numerous token sales as well as all aspects of that ecosystem, both here in the US as well as globally.
My name is Wenchi Hu. Hi. I am a partner at Latham and Watkins, and I started to be involved in cryptocurrency space just about 10 months ago because that's the time I left SEC to go back to the private sector. So I spent 5 years at the SEC, and I supervised the so-called market infrastructure, which is the world that blockchain community wants to disrupt. So it's been very, very interesting 10 months, a period of time. And I have been advising all the financial regulatory issues relating to cryptocurrency, ICO, as well as blockchain technology development.
I'm Wendy Jackson. I'm a senior manager in international tax with Deloitte. I've been working in the blockchain world for about 5 years, and we've worked with miners, we've worked with cryptocurrencies themselves, and more recently in the past year or so, we've worked on several launches and continue to work in that space.
Good afternoon, everyone. My name's Tony Lai. I am a recovering lawyer. I practiced for 5 years in the UK as a technology, media, data, and communications lawyer before coming out to Silicon Valley, Stanford, where I did another round of law school, but focused mainly upon legal technology as part of my law school at Stanford. Helped to establish a community at Stanford called CodeX, which is the Stanford Center for Legal Informatics, and it sits between Stanford's law school and Stanford's computer science department, essentially studying the science of information flow through the legal system. Part of that thread took me into computational law, which is sort of a larger subset of the blockchain ecosystem, looking at things like legal specification protocols. How do we sort of code up both contracts as well as regulations, various pieces of that. Out of that, we've created the CodeX blockchain group at Stanford Law School, which is, there's a lot of focus around bringing together regulators from various different jurisdictions, helping them sort of think through the approaches that they want to take in the context of what's happening in various different industries. So this isn't just financial services, but it's sort of data protection regulators, it's bioscience regulators. I think one of the interesting things that we're looking at from Codex's perspective is sort of beyond the initial cryptocurrency and Bitcoin framework. You know, what are the ways in which blockchain are going to influence all sorts of industries and verticals? My full-time job, though, is a CEO and co-founder of a company called Legal.io. We've built out a decentralized legal services delivery infrastructure. We work with major partners like the New York State Bar, the Florida State Bar, and also commercial partners like Twitch, essentially trying to create scalable architectures for the delivery of legal services using lawyers, as well as upcoming technologies like smart contracts and peer-to-peer frameworks like that.
Perfect. So now that you have a little bit more context about all of us, it'll be helpful to get some context about you as well. So could I just get a really quick show of hands, entrepreneurs sitting in the room, people who are running startups, I'm assuming in the crypto space. Okay, perfect. What about investors? Can I get a quick show of hands for investors? Awesome. What about just, I guess, representing institutions that are looking to get into the crypto space? Couple. So it looks like we're mainly split between investors and entrepreneurs, mostly entrepreneurs, which is great. Okay, perfect. So that'll help guide our conversation. So to get started, I thought it would be interesting to just touch upon the most topical issue, which is the Coinbase case that we were talking about before we got on stage. And I know, Grant, that you've been working with them for the past year and really representing them. So maybe if you can share a little bit more context about what's happening there, and we can get all of your input on how now we have the SEC and IRS really regulating differently on crypto as an asset, or even blockchain startups as an entity.
So the case is still pending, so I can't comment too much, but just for those who may not be familiar with it, the IRS sought the records of 500 users of Coinbase for the period of 2013 through 2015, essentially all the users who had any transactions in digital currency, primarily Bitcoin, for that time period. And so Coinbase, as well as a number of other organizations who came in as amici, fought it, basically. And as the IRS noted, usually people don't fight the IRS. Coinbase did. We were able to successfully narrow it through a variety of means, including through the court, down from 500,000 users to roughly about 14,000, which is about 97% drop. And then also narrow the categories. They were asking for very broad areas of categories. We were able to significantly reduce the types of information that those roughly 14,000 users were required to share for Coinbase.
And so I thought perhaps all of you can comment a little bit about the case if that's impacted your line of work, and also because, well, specific to Wendy as well, I guess, how the IRS and how the SEC sees crypto assets is very different. So if you could talk a little bit about how we see regulatory bodies really aligning on that coming forward.
Well, I think, the IRS has, published a notice where they say essentially cryptocurrency is treated like property, and then you have to look to other parts of the code to see exactly, what kind of income that's going to give rise to. And, it does come with attendant reporting requirements as well. So, those are the things you have to understand as if you hold cryptocurrency, if you sell cryptocurrency, that there are reporting requirements. The IRS is definitely taking that position, and while you should consult with your attorneys on what position you want to take, that's definitely what the IRS is coming out with. So.
And Wenchi and Tony.
Sure. So Obviously, the SEC does not regulate, or the tax is not SEC's jurisdiction, but what SEC is interested in looking at cryptocurrencies, I think goes to the fundamental question is what crypto assets will be considered as a security, and what crypto assets would not be securities. And if crypto assets are securities and they are listed for trading on, crypto exchanges such as Coinbase, then the question is whether there is a violation of the Exchange Act provision that if you want to provide a trading platform to match buyer and seller together, and you need to be registered as a national securities exchange. And if you're not registered, and you need to have an exemption, and I think in July 2017, the SEC came out with the 21A report, the Dow report that everyone is aware of. And one of the aspects of the Dow report is to touch upon those trading platforms that listed currently in the cryptocurrencies for trading. So it's really a big question mark, that right now everybody is wondering that whether certain altcoins would be securities or not.
I think building off of that, Wenchi, one of the conversations we were just having before is just this this distinction between where regulatory authority ultimately lies. With respect to securities, we're talking at the SEC. With respect to asset trading, but specifically non-spot asset trading, it's the CFTC, and then you've got other bodies like the IRS and the FTC, and that's just the US, right? I think the interesting thing from a sort of, I guess, a slightly jurisprudential perspective is how much is there going to be arbitrage between the different kinds of international regulation, given that Bitcoin is fundamentally international and it's really in a sense a forerunner for a lot more of these altcoins that are going to be issued, by many of the people in this room. And so I think what we're seeing is somewhat regulation through enforcement, which is always a bit tough when it comes to a new area because nobody knows what's going to be actually enforced upon, and so you're going to have to sort of wait for these, these actions before, and then everybody scrambles afterwards. And I think part of what I'd like to see happen more is a little more sort of preemptive discussion and education and sort of awareness building around some of the principles that are going to guide some of this regulation by these various different bodies, where the different remits lie. And if there's potential for international cooperation around some of this, because I think there's a consistency around, the intentions of regulation that are not completely incompatible with a decentralized crypto framework. Well, I think some of the former regulators should speak to that maybe.
Preemptive will be an example that a government agency publishes a guidance, for example. I know that Singapore MAS has published a guidance, and similarly, I think ESMA also published a guidance in Europe. And I think Abu Dhabi, also the regulator has also published a guidance on ICO. And then in the case of Singapore MAS, they also gave some examples, like example case 1, case 2. In this example, this will be utility token. In that example, will be security token. And I think that will be more like preemptive, that kind of thing. And unfortunately, I think what I have observed in the market, number one, is that the government agencies typically are reluctant to come out with some sort of a preemptive guidance because that looks a little bit like beyond their authority, that they're supposed to interpret the law and apply the law or even enforce the law, and they're not supposed to play the role of the Congress. Especially in the case of cryptocurrencies, there are so many different types of cryptocurrencies out there, and what if you get it wrong? And sometimes even if you give some high-level guidance or examples, people are still asking, am I supposed to be in example 1 or example 2? It looks like I'm a hybrid of example 1 and 2. So what I have observed in the case of SEC is that, and same as the CFTC, they actually encouraged people to go in to talk to them and speak with them. And as a matter of fact, I am aware of that. People do go in to talk to the agency or call them and ask them about, before they decide to make an investment or before they decide to really do an ICO or before they decide to set up a crypto exchange. So that is one thing. And the second thing I want to say about regulatory arbitrage, it's interesting, in the experience of advising ICO on a global basis, what I've been experiencing and witnessing working with the various jurisdictions is that sometimes the other jurisdictions such as UK or Singapore, Hong Kong, the local counsel or my colleagues would tell me that, well, what do you think on the US side? Do you think this will be utility token or securities token? And then sometimes I would say that, well, I think that this probably we will have to do a securities offering or find an exemption. And they will say that, well, if you're going to treat it as securities in the SEC's jurisdiction, we will be afraid that, MAS or Singapore's Ministry of Futures, Securities Ministry of Securities and Futures Authority or UK FCA are going to ask question that, if in the US it's being viewed as securities, why didn't you do it as a securities in UK or in Asia? And I asked my colleague or local counsel, why do you think that way? And then they would say that, well, look, right after SEC published the July 2017 21A report, MAS immediately came out with a similar view, and similarly, Hong Kong authority also came out with similar view. So people seem to think that there is a sort of a degree of a regulatory, I don't want to say coordination because I don't really know whether there's in fact coordination or not, but maybe consistency that people are, cautious about the approach taken to cryptocurrencies. So if there are some major jurisdictions that come up with certain guidance or a certain view, then the other jurisdictions feel that, there are reasons to do that. So how this whole thing is going to go is really very difficult to tell, but what I see, because of Bitcoin trading is so high and there been so much desire to facilitate cryptocurrency trading, and I think in 2018 it's very likely that even though the government agencies don't want to come out with preemptive guidance as we just talked about, it may not be avoidable that the relevant authorities will have to answer some of these questions. For example, I know for sure that people wanted to set up crypto exchanges. They are applying for ATS registration, or people wanted to set up crypto fund. Then when you want to set up crypto fund, one question is, how do I know whether I will become an investment company or not? And how do I know whether 40% of my investment in crypto funds will be securities or non-securities? So I think that these, in 2018, I think we probably will start to see answers.
And actually, it's a great point. Speaking of different jurisdictions, I mean, now we're increasingly see Singapore and Switzerland actually both becoming hotbeds for a lot of ICOs, and that has both legal implications, regulatory implications, as well as tax implications on how do you see that. And so, Grant, I'm sure you've worked with a lot of companies that need to do a lot of preemptive work where they actually have conversations with the SEC in advance. And I'm sure Wendy and Tony as well, both of you have worked with companies, whether it's from a tax perspective or from a legal perspective. Maybe you can add a little bit more context about how do you do these kind of cross-border opportunities?
Yeah, I think that the SEC is probably taking the perspective that our July 25th guidance was sufficient. We alerted you to what the issues are. You've seen statements by the commissioner that happened in mid-November, Chief Commissioner Clayton. So I'm not sure that we're going to see guidance. I suspect we will see more enforcement. I think if you look back as a model, FinCEN in March 2013 issued guidance as to digital currency and when you become a digital currency exchanger and have to register with FinCEN, and then they started enforcement actions. I suspect that's sort of the pattern we will see, that the companies that did things prior to July 25th may get a little bit of a pass. Companies afterwards will have more scrutiny. So I think that, I mean, it remains to be seen, but I think that's sort of what the SEC's perspective is going to be, even though I don't think that guidance was particularly helpful in the context of most of the tokens that are being sold now are not DAO-like tokens. So I don't think it was as helpful as I think they probably thought it was and had hoped. But as far as internationally, you know, we bring in people, you know, outside counsel for these jurisdictions, but we see it a lot. So like Switzerland, there's a lot of comfort with Switzerland because it's a relatively sophisticated country. They have a regime where you actually go through regulators to get certain approvals. That process has slowed down a lot. I think Switzerland's taking a little bit more conservative approach. Singapore, you saw what happened in China. So I think you always have to be worried about countries where one person can make a decision and shut down an entire industry. So I'm probably a little bit less bullish about Singapore than many of my clients, quite frankly. But I think it's a wait to see. I don't think you're going to see international coordination on this. I think what you see is some copycat type of coordination in a sense. Even within the US government, it's shocking that there's a lot less coordination than you think there is. And there's more competition in a sense, and they're competing for each other, for cases and things.
Do you want to go first? Okay. So if there are, you know, companies that are going to launch here in the U.S., there are companies that are going to launch abroad. And, you know, one thing to keep in mind is, you know, even if you're going to launch from a foreign country, if you are going to do so, if it's controlled by U.S. persons, you're still within the U.S. tax net as well. So, you know, might be some benefits to doing so, but also added complexity. You know, when you're planning on, you know, selling tokens, you probably want to, you know, work with your tax advisor to make sure you understand how that's going to be taxed in that jurisdiction, whether it could be taxable in other jurisdictions as well, the timing of that taxation. You know, for example, you know, there's no, you know, published authority necessarily on how you treat the sale of a token if it's in a, you know, token launch for GAAP purposes, right? But it might be treated one way for GAAP. US GAAP might be treated another way for IFRS. And foreign countries' tax laws often will tee off of the IFRS treatment or the local GAAP treatment. Whereas in the U.S., there's a lot more specialized tax rules, and there are often departures for tax. So these are things you want to think through as you're, you know, developing what your plan is for a token launch or a token sale. There's also VAT implications to think through. There's state and local tax issues to think through, sales tax. And these are not things that should drive your business decisions, but definitely you want to have your eyes open as you're going through and structuring, you know, what your plans are, so you know what's out there.
And actually, just to follow up really quickly on tax implications, because I'm sure a lot of folks sitting in the audience are both entrepreneurs, but also perhaps investors at the same time. So would that look differently, or are there a couple of principles that people should follow as individuals who invest into crypto, or as institutions or startups that are in the crypto space?
File your tax returns.
That's always a good way to go.
Yeah, I would say the same. I would say similarly. I mean, if you're an investor in a corporation, right? That's going to be your corporate tax consequences, and then, you know, their shareholder level tax consequences. If you're an investor who's holding cryptocurrency and selling it, you know, that sort of goes back to, you know, making sure that you're properly tracking and reporting your gains.
So just to the international coordination or sort of arbitrage point, we've been, so we were a StartX company as well. I helped to set up StartX, and then we put our company through it as well. And as a community, we have been sharing collective intelligence about, you know, the attorneys who have been advising in various different ways and the approaches. And I think one thing we're seeing in that kind of an ecosystem where folks are sort of building collective intelligence is that you're seeing a lot of sort of shared approaches in terms of what's worked, what hasn't worked, in the same way as traditionally within a law firm that might be kept within a law firm sort of thing. But I think the interesting thing in terms of the international piece, you mentioned you can't get away if there's if there's some sort of nexus with an American individual from potentially having the SEC's approaches. Just the broader notion of like setting intent. An intent to comply within the context of a very uncertain space. If you're able to show that you do go to a jurisdiction that is more sophisticated, like a Switzerland or potentially a Singapore, or even if you've taken the approach of actually trying to get a regulated offering under US securities law. And I think that, with the SAFT and then ultimately with some of the things that are coming through the pipeline for non-accredited investors to be involved as well. I just want to touch upon, if that's okay, a new offering that's going to be offered through the platform of a collaborator of mine. It's called Republic, and they're just listing a crypto piece. Republic does equity crowdfunding, and through Reg CF under the Jobs Act, and those are you can issue and market securities to people all around the world. And they're bringing out a new approach for allowing retail investors, non-accredited investors, to be able to invest in pre-sales, just like you would on CoinList. And so so this week they'll be announcing the first of these. It's a blockchain company called YouNow. They weren't originally a blockchain company. They've been established for a while. They're a user-generated content company. They issued on CoinList, and then they're now through Republic Crypto issuing via Reg CF pre-sale for sort of retail investors. And the point about that is it's an intent to fully comply with US securities offerings. And I think, again, I'd be curious for your impression, those of you who are currently practicing, but it seems that in an uncertain sort of landscape, one of the best things you can do is be talking to the regulators and be showing an intent to be as compliant as possible.
No, I think intent is extraordinarily important. So from a regulator's perspective, there's a big difference for someone who just ignores the laws, takes money from people, is oblivious or fraudulent. The treatment that type of company gets is, we're going to try and shut you down, and then do a lot of bad things to you. A company that is trying to be compliant but makes mistakes or gets the law wrong, but isn't trying to cheat anybody, isn't ignoring laws, the treatment is much, much better. Doesn't mean you get it right. And this is a very uncertain area. You talk about kind of collective discussions. This law is changing literally every day. And so it is very hard to keep up with it as an entrepreneur. But also what's sort of different about this space is that the entrepreneurs who come to us seem to have a frame of mind that ours is a utility token, and here's why. And I think there's a lot more to it than just simply, does it have utility on the platform? But the entrepreneurs are very educated, and this is also, there's so much information out there, and so they're able to use that information. I think just simply saying I read it on the internet isn't going to cut it. But if you've really done due diligence, you bring in real people who understand the compliance component of it versus just maybe the engineering component or coding component. You seek legal or tax advice. Doesn't mean it's not going to be painful, but it's going to be a lot less painful than if you just ignore all this stuff that's out there.
And I just wanted to add that I think I completely agree with Grant. To be honest, a lot of entrepreneurs that came to us and have a similar experience as Grant, that their mind seems to be said that I'm doing utility tokens. And to be honest, in today, what I see is that utility tokens have a significant amount of uncertainty. And it's not just about the rights attached to the tokens that look like consumptive use, but you also have to see how these tokens are marketed and why they are sold to investors and who are investing in them and what are the expectations of these investors. So there are many, many other factors that go beyond what you give to the investors, embedded in the token. So, so it's not like the token itself is going to be consumptive use, and therefore it's utility tokens, and therefore they're not securities, and therefore you don't have to comply with securities law. And we have got a lot of people coming, and they, as Grant said, that they read the internet. To be honest, even with the lawyers with many years experience, all we can achieve right now, absence of very, Congress action or the regulatory agency gives you a no action letter. If you don't want to find an exemption from registration, then all you can do is really the best effort. I can never tell you that this is absolutely safe if you want to go ahead without relying on an exemption. So it's a world that is really with significant amount of uncertainty, and sometimes I really encourage clients that if you really want to be risk averse, do all you can, consult expert, and consult experienced lawyers. And if you really want to, we should talk to staff at the SEC about it. So there are just a lot of issues facing the ICO and cryptocurrency world, and personally, I'm very sympathetic with it.
So we've talked about utility and security tokens several times, and maybe I'm sure a lot of folks in the audience are already familiar, but just to clarify, usually when we talk about ICOs, a lot of startups don't like to use that term because that implies securitization to some extent, whereas utility tokens, sometimes you can get away with some of the things that otherwise would be expected from regulatory agencies when it is actually a security offering. But that kind of falls into the category of all the companies that are raising token sales in some sort of context. And I thought in kind of our last couple minutes, it'll be helpful to touch on startups that are just leveraging blockchain technology but are not necessarily raising through coin sales very quickly, to wrap it up for folks who aren't necessarily selling coins. So perhaps you could touch really quickly on some of the things that you've seen interesting in this space, where you really just leverage the technology and it doesn't even have to be for a financial application, that you think are worth noting.
So there's so many great applications of blockchain. I think you see it in the democratization of the market. You see it in the context of ascertaining what do your customers want through voting or through incentives. I think you're going to see it in the title industry. You're already starting to see it there. I won't pick all of them. I'll let you guys add to them. But there's a lot of great applications. The one great thing about ICOs is it's brought a lot of tremendous ideas out there that maybe would not have been developed. And so I think you'll see the byproduct out of the next 6 to 18 months.
Similarly, I think I've seen a lot of use cases of blockchain that are truly innovative, and I do believe that this is an unprecedented time in history, that there's so many technology innovations that wouldn't otherwise be possible without ICO. But some of, as the show say, that some of the blockchain, they are being developed without the need of issuing tokens. Some of things I have seen, for example, there's industry effort of doing this so-called bilateral real-time settlement of securities in the equity space that can eliminate the central counterparty, meaning that eliminate the DTCC subsidiaries being the clearinghouse. So all of us can just trade on the National Securities Exchange and immediately settle on the blockchain on a bilateral basis. And that is really a neat development, because that eliminates the need for posting collateral or margin, because today the security settlement is on T+2 basis. Is that 2 day really matters? It used to be T+3, now T+2, but no matter what, how much you shorten the settlement cycle, is still there is a delay, and that delay raises a counterparty credit risk. So you move that trade into the clearinghouse, then clearinghouse has to charge you collateral in case one side of the trade defaults, and it gets a capital charge on the book, on your trading book. And so to be able to utilize blockchain for real-time settlement, I think it's a significant benefit for the industry.
I would just say 2 things. So with the advent of blockchain technology, we're sort of increasing the number of things that can be done autonomously. And the tax code looks to the source and character of income to try and determine what the tax consequences are. And the tax code hasn't been updated to account for things like computer programs in more than a decade. So there's a lot of reasoning by analogy that has to take place. So I would just encourage you, regardless of whether you're launching a token or just getting involved in the blockchain ecosystem, to talk through those issues with your tax provider. Second,
Is there a corollary for APD with crypto?
So I can talk to you afterwards about that. And the other thing is we're getting tax legislation potentially this year, potentially before the end of the year. So just encourage everyone, keep your eyes on that, and then understand the differences in timing and when your transactions occur, if we do indeed get tax reform, if it's going to be in the new regime.
So some of the use cases I want to mention kind of come out from this computational law framework, which in a sense pre-existed the blockchain, but speaks very much to the power of when you're able to turn certain potentially very opaque contracts that are sort of kept behind closed doors out into the open that are queryable by code. Things like service level agreements. We've had telecoms companies and standards bodies looking to be able to automate and sort of computationalize the distribution of penalty payments so that, service level agreements. And there's huge amounts of money that are litigated over these contracts every single year, and that's all going to the pockets of lawyers. And so, arguing against the panel here maybe somewhat, but there are a lot of, I think, blockchain use cases which may or may not necessarily involve tokens and ICOs that are going to ultimately remove a lot of these transaction costs and middlemen frameworks, whether it's in legal services, in supply chain, digital rights management, asset management, and trade finance and things like that. But I do want to get back to this, I think, potentially unique piece around what having the sort of the tokenization piece and the coin piece represents. And it's one in terms of the network effects. It's a totally new way of creating and incentivizing the growth of the network based upon the fact that your users have, in some sense, part ownership, and they're totally differently incentivized than a Facebook user to invite their friends in, for example. And then secondly, again, it's just, this was touched upon earlier on the CodeX panel, but there's just this totally a different set of investors. You're not just looking at VCs here in a very narrow area of people who have traditionally been the ones putting money into these kinds of innovations, but you've got hedge funds and you've got individual investors, and trying to create that framework where essentially there's as much of a level playing field between all those different parties as possible, I think is one of these sort of broader democratization potentials for blockchain as well.
I think what you can all really tell from this panel is that we're all really excited about the potential of blockchain, whether it's in terms of the fundamental technology or even blockchain in the sense of applied to token sales and ICOs, with it really reaching unprecedented levels, like Tony said. Whereas crowdfunding never even reached 10% of venture capital funding. Now you see ICOs and token sales raising many times what VCs are putting into the industry. So it's a really exciting time to be in this space. And at the same time, there's a lot of legal and tax and just overall regulatory issues that you really should be aware of in order to be successful in this industry. And you've already heard a lot of the things that we're thinking about in the industry. So I think probably the top takeaway is really do your diligence and talk to the right folks and make sure you have all the conversations before you get started, and as soon as possible. So hopefully this has given you some really good perspectives into what to do, and also help you find the right folks that you should talk to. So thank you all so much for your time, and definitely make sure to talk to our speakers afterwards.
Thank you very much. All right, our next panel is the future of fintech. So if I could please have to the stage Lily Liu, the co-founder and CFO of Earn.com, formerly known as 21 Inc., George Lee, CEO of WeTrust.io, Li Huo, Senior Director at Huobi, Nader Al-Naji, founder of Basecoin, and the moderator Michael Fang, co-founder of CoinAlpha.
Thank you. Hey everyone, hope everyone had a good lunch and you're in for a great treat tonight, because, or this afternoon, because we have some people on this stage who are building the future of fintech, which is what this panel is all about. My name is Michael Feng. I'm one of the founders of Coin Alpha. We're a blockchain funds platform. We use a blockchain to remove the middlemen associated with traditional asset management. The first fund on our platform is our own, which is a machine learning based quant hedge fund. And in the future, we'll add others as well. But before this, I was an investment banker. And as an investment banker, you kind of have to be a student of monetary history. And one thing I learned throughout that time was that what we know today as money has been a very volatile concept over the span of times. Like, many people don't know that silver was actually the primary standard upon which people transacted from medieval times up until today, including the US, which was primarily on a silver standard. And it was only due to certain accents of history that we moved to the gold standard, to Bretton Woods, and to what we have today, which is fractional reserve banking. And so I'm hoping that the panelists, just to kick things off, can talk a bit about their projects and also what the future of fintech will look like once their projects succeed. George?
Hi everybody, my name is George, one of the co-founders of WeTrust and CEO. In my perspective, and many of you might agree, Bitcoin and digital currency can be seen as digital gold, as Mike and many people have alluded to before. However, the promise of digital currency, I believe, won't be met unless there's a parallel, decentralized financial system that mirrors or does better than the current system that we have today. So at WeTrust, what we're doing is building that parallel, decentralized financial system, products, services such as savings and lending, credit scores, and identity, and insurance. And we'll kind of go into deeper detail about these concepts, but what we're trying to do is enable those on the blockchain.
Thank you, George. My name is Nader. I'm CEO of Basecoin, which is a price-stable cryptocurrency. It's like, imagine you have Bitcoin. It's a decentralized ledger, but Bitcoin, the Basecoin is always worth $1, right? Interesting concept. Like, why would you want that, right? Well, there's this thing called volatility, which I think a lot of us here like because the price just seems to keep going up. But it actually makes the token not very useful for day-to-day transactions, but more importantly, payments over time. So for example, like George was saying, if you want to structure a loan or a salary or any kind of contract over time with a currency that's volatile, you run into major problems. Imagine, for example, you have a salary and you want to denominate that salary in, like, for example, say it's 1 Bitcoin per month. Right? Well, one of two things is going to happen, even if you have relatively low volatility. Either the price of the token is going to go up, in which case your employer wants to fire you or renegotiate the contract because he's paying you too much, or it's going to go down, in which case you're probably going to go hungry. And so really, if the volatility of a token moves against you at any point during a financial contract that involves time, either you're screwed or the counterparty is screwed. So I think that historically, as Mike was saying, society started with gold. It started with fixed supply. But the problem with fixed supply is that it can't respond to fluctuations in demand without fluctuations in the value of the unit. And that's where the volatility comes from. Society evolved to have fiat actually as a feature because it has an elastic supply. And that elastic supply is what gives you the stability that enables all of the most basic financial contracts in our economy. And so that's what Basecoin is doing. So it's taking the decentralized ledger technology, which is Bitcoin, saying this is an amazing technological innovation. Let's modify the rules just a little bit so that we have an elastic supply of tokens and they stay stable. So initially they stay pegged to $1. Every Basecoin is $1. In the long run, it's a basket of goods peg. And all of this is totally decentralized, and it operates like an algorithmic central bank. Lily, love to hear about Earn.
My name is Lily. I am part of Earn.com. Some of you might have known us as 21 until recently. And essentially what we are is we're a microtasking platform where you can get paid in cryptocurrency, currently Bitcoin, in the future our token, in order to complete simple tasks, starting with email. So you can think about it very simply as, for example, a paid LinkedIn or a way that you can actually get paid to respond to a whole bunch of sort of cold email that we all have an issue with. And if you sort of generalize that, what's really happening with an email is it's a microtask, right? It's a few minutes of your time that you're requested to spend about 100 times a day. And if you think about it in those terms, and there's many different ways you can be asked to spend a few minutes of your time, and the cryptocurrency aspect of it enables you to actually monetize that. So we have a number of users are excited about being able to monetize something like their email, which they previously were not able to, and that's essentially what we are today.
And before, I just wanted to say, I'm a big earn.com user. This thing actually really changed. She didn't tell me, I didn't even know her before today, but this thing changed my inbox, basically. Like, this is actually really cool. So.
Well, thank you, Nader. So that's kind of for the user. On the sender side, the other side of the marketplace, if you will, what a number of people find it very useful for is, instead of spending weeks putting together a cold email outreach campaign to get, 1 to 3% of those people to actually engage with you, we now get about 60 to 80% response rates within 24 hours to complex tasks, simply because you're, putting some money where your mouth is on the other side. So it's a way of very quickly bringing some more efficiency to something as simple and as ubiquitous as really email and just communication.
Yep. Hi, everybody. My name is Lee. I've been introduced a little bit about myself earlier today on the panel as well. So I'm part of the Huobi as an exchange, the crypto exchange. And I would say, if you want to get listed, go to Huobi.pro. If you want to get trade, go to Huobi.pro. So enough about talking about Huobi. So I just want to talk a little bit about my background before I joined Huobi. That's the whole reason why I got invited into this panel, because I used to run my own startup in the fintech space. It's about quantitative trading, and then I moved. It's been up and running for 2 years, and I moved from the fintech space to the blockchain space. I would be pleasure and honor to join this panel today to share a bit of my experience, a bit of my thoughts about the future of fintech.
Thanks, everyone. Maybe just on that subject, because I think the word fintech and blockchain, I think, are both pretty overloaded at this point. For those of the audience who don't know, about a few years ago, a lot of capital poured into blockchain startups that were trying to disrupt finance. And a lot of them were using something called distributed ledger technology in order to change processes at large financial institutions. So there's companies like R3, Digital Asset, Hyperledger, and Chain.com. And so fast forward a few years, a lot of them are still kind of like in the proof of concept stage, whereas this year, 2017, has really been about the rise of public blockchain protocols, and of course the ICO boom. Maybe Lily, can you comment on kind of like the differences between that first wave of blockchain startups and the current wave?
Sure. So I think what we've seen is we've actually seen a few of these waves of great exuberance followed by a winter for that specific technology. So if you remember, Bitcoin was really hot in 2013, capped out at $1,300, $1,400 before there was this extended 2-year crypto winter, which we've now obviously evolved from. 2016 was a year of Bitcoin bad, blockchain good, and that's when there was tremendous excitement amongst institutions in Wall Street around private blockchain because of its potential to, for example, clear complex derivatives in 3 days rather than 30 days, apply that to several trillion-dollar industry, and that's really valuable. And so that sort of reached its peak of exuberance, I would say, probably in 2016, maybe earlier this year. And this year has obviously been about back on the public blockchain and this explosion of ICOs in the last 6 months. Now, I do think that there is great potential and utility in private blockchain, again, because it brings tremendous efficiency to an absolutely enormous and global industry. On the other hand, the contrast between a private blockchain, permission blockchain amongst a select group of, let's say, 20, 30 actors or something on that scale, is it's incrementally very valuable, but it's not sort of the sea change that we see with public blockchain. So you can compare a little bit to, 20 years ago, there was a debate about the utility of internet, which is permissionless, or the internet, which is permissioned. Today we have both, but I think it's fairly clear that the internet, while corporates use it, is nowhere clear in sort of global impact and global change as the permissionless internet and transmission of information. In a certain way, 10 years ago, there's sort of a replay of that when there was, again, a debate around the private cloud versus the public cloud. Private cloud is, many billions of dollars of an industry, but it's not really sort of the scale and the reach and the transformative sort of power of the public cloud. And I think that we're going to see that again with private and public blockchains. There are use cases and there's utility in sort of both applications, but it's really the public blockchain which encourages much greater participation in the global economy, which lowers dramatically the barriers to entry to start a business, as we're seeing with 1,000 token sales happening over the last 6 months, and many of these other sort of really transformative effects that we can experience, not just in fintech, but really the global economy.
Thanks, Lily. And I was wondering, Lihuo, whether you had thoughts on this, because as someone who's had a fintech startup before, you've clearly seen the evolution of the market, from traditional fintech to blockchain and whatever the future might bring. How do you see the differences between kind of like what we call fintech and blockchain today, and how do you think that will change in the future? For instance, are we going to see non-blockchain fintech startups anytime soon?
Yeah, I would love to share a little bit about that as well. So I think fintech in the past, people focusing really on the finance part, which is the fin part of the fintech. There were lots of space people were looking at, including payments, including settlements. In the past, because I'm based in Asia, especially in China, there were lots of new fintech startups, including Alipay, WeChat Pay, and all these innovative, creative solutions that's been built in this country. And people's life has been changed, transformed dramatically. Nowadays, people don't have to carry out their wallet to go on the street. They use their mobile phones. They use WeChat Pay, Alipay to finish payments, I would say. And then lots of new startups, the one that I've been through, there are lots of difficulties to start up, to run the startup at the beginning. Especially you have to go through all the registration process, opening up bank accounts and all that stuff, really troublesome. And nowadays, if you look at the blockchain specifically, at the beginning, most of the people think that blockchain technology, it's part of the fintech, because blockchain technology has been in the world for quite some time. Actually, I heard about this word, at the early 2000. Actually, lots of people starting to talk about decentralized network, and later on transforming into blockchain, and. With blockchain technology, I think what really interests me the most, it really, like Lily mentioned earlier, it's really lower the entry barriers for lots of the greatest demand on the planet. They don't have to go through all this process to start up fintech, to start up a fintech company. And also now that we have this creative way of doing fundraising, ICO, then you don't have to go through the venture capital process to raise funding. And ICO, it's a way to really expediting the process. And when we look back in the early 2000, the dot-com period, and lots of people lots of companies have to develop the underlying protocol before they actually build on applications. Nowadays, if you look at the space of blockchains, you look at lots of people are building on the protocol layers. Like people are still talking about Ethereum, talking about Bitcoin, how do we scale up the blockchain, the public chain, or are we doing a private chain or doing a public chain, etc. But at the same time, there are other people, the other group of people starting to build on applications. Obviously, we talk about off the stage about CryptoKitty, right? And then lots of people are trying to build funny, interesting applications on top of these blockchains, and which is amazing because everything is happening at the same time instead of at different time. So this is what amazed me the most. It's everything happens so fast in this industry. So in order to keep up the pace, in order to be in the industry, you got to learn really fast. And then you got to be open-minded to accept new stuff. Lots of people are still asking me the questions. You know, if you want to do an ICO, what do you really get? Are you getting a part of the company? Are you getting, what did you get at the end? Because people are still used to getting part of the shares of the company because they feel like they own the company. So yeah, so I feel like in the future, lots of things, I mean, what we can do in the future is, you know, is unlimited. There are a lot of things we can do in this space, yeah.
Yeah, I think one of the challenges of fintech is that despite all the developments in that industry, it still cannot really transcend national borders, right? You have many different types of financial policies in each country, and you have many different kinds of fiat currencies. And then second, you have still 2 billion people in the world that are unbanked. And despite all the effort and progress that has been made so far, there is so much to do still. But yeah, I think blockchain is where kind of order of magnitude of speed of improvement can be seen. Now, many people have been trying to do you know, lending on the internet. For example, BTC Jam, which is one of the first ones, they raised quite a bit of money. But one of the challenges that they faced was there was no credit identity, right? So if there's no carrot and stick type of approach, no reputation, then you can't get people to have the right incentives to do the right thing. So I think it's very important to have some kind of blockchain-based identity that is truly global in scale. And upon that, you can then build a kind of financial system. Because the other reason why 2 billion people are unbanked and don't have bank accounts, can't get a loan, is because there's very weak identity solutions for these people. It's not because they are untrustworthy. They are trustworthy with people that they know and that they trust, but no, the banks or the other institutions cannot have an easy way to evaluate their creditworthiness. And so then you'll ask, so how do we address the credit identity and reputation system? And so at WeTrust, what we're doing is creating applications that allow people to enjoy and want to use these applications to digitize their cash transactions. Many of these people in the world who are unbanked, it's not like they don't save and lend. They do save and lend, but in cash with people that they know and trust. So what we're doing is creating an easy solution for people to do and partake in these activities just as they are before in an easy way, but now we've digitized all these transactions and we can create identities and profiles such that in the future they can interact with strangers because they have something to lose. There's a carrot and a stick. They have a reputation that they've built, they've spent time to build. And they can take this reputation to other institutions or even the internet and lend from a stranger because we know, because there's now this identity that they've spent so much effort in building up. And so these are the things I think that are possible with blockchain because it transcends the national borders, and there's also kind of that validation aspect where you know, hey, I made a promise to pay back this much money, and you know, on our platform, smart contracts can see that, and you can validate that.
Yeah, that's definitely a very interesting point, and I wanted to kind of like build upon something you said earlier, which is that George, that you know people can kind of like use this as a system of lending and credit. But I guess so we all know that prices are very volatile right now. I guess arguably you wouldn't want to lend your Bitcoin out if you can just hold it and earn 10x in a year. Maybe one question is like I think obviously Nader, based on you guys are working on a solution to that volatility. I was wondering whether maybe George, if you could kind of like talk about volatility, how that impacts what you're doing, and if Nader, you could kind of give the possible solution to.
Yeah, so one of our biggest challenges, there's many challenges, one of which is the volatility of the token, underlying token of value. People don't want to interact in savings and lending activities if the underlying is so much more volatile. You layer on the credit risk and then you have this underlying risk of the token, then people aren't going to be using this for savings and lending and these types of normal activities. So it's so important for our platform to succeed, and we're so dependent on having many alternatives and solutions. And one of which is Nader is working on. There's stable coins, there's tokens that are backed by gold, and so there's a lot of interesting solutions, and I'll let Nader discuss.
Yeah. So surprisingly, this need is very common. You know, our inbox is full of people who are trying to make apps, and their apps don't work because there's everything they do in the app requires betting on Bitcoin or betting on Ethereum, which is untenable. And so yeah, so cryptocurrency today, you know, I think everything out there right now, almost everything, is kind of like gold. You know, it's fixed supply and it's volatile because fluctuations in demand have to fluctuate the price, right? If you look historically, right, society moved away from gold to now it's USD because it's actually an elastic supply that can remove that volatility, right? Elastic supply is the answer that central banks have been applying for a long, long time to enable all of these most basic financial contracts in our economy. It's actually one of the things that fiat does very well that's very useful for society. And so what Basecoin does is we basically, you know, we have a decentralized ledger and we apply the exact same logic to the blockchain. So what we do is we have a price, an exchange rate that's uploaded to the blockchain in a decentralized way. Bitcoin has mining. Miners validate transactions. In our system, it's very similar. We have a decentralized stake-based kind of exchange rate uploaded to the blockchain. And there's a monetary policy is the second piece that's different. It just looks at that price, and if it's above $1, it expands supply. Less than $1, contracts supply, very much like a central bank. And so, you know, cryptocurrency today is kind of like gold, and we really think that we need a USD, you know, for this market. And that's really what Basecoin is trying to bring.
Cool. So I'll ask one last question, and then maybe turn it over to the audience for questions. And that one is, you know, I feel like there's thousands of projects out there. All of us are now working on the single type or the single vision for a single solution was out there. Maybe to wrap up, if you can kind of describe how you differentiate from some of the other projects out there, whether it's an exchange, whether it's a social network, a stable coin, or credit. George?
Yeah, so I think a lot of people are trying to create financial applications on the blockchain, but reputation is kind of a critical component of it. But how do you bootstrap reputation? How do you get that information about people? And so our first product is a Trusted Lending Circle, which allows people who are already partaking in these community finance type of activities to use our application, which is going to be released to the public next week, actually, at wetrust.io. The product is at tlc.wetrust.io. And we're really excited to be sharing that with our community because it's kind of the first step in this financial evolution on the blockchain.
Yeah, from my perspective, you know, with crypto, we're really looking at some of the strongest first mover advantages and network effects possibly of any market ever. And you know, the way you kind of know this is you look at Bitcoin, right? Bitcoin software has been open sourced since 2008, and yet, you know, there's this BTC thing that's been at the top of the market, and it's only getting more kind of detached from the rest. And those network effects form around teams, I think. So you see the core dev team for Bitcoin. Whatever they say is Bitcoin, that is Bitcoin. And so for Basecoin, you know, we're kind of the first we're a huge breakthrough for stable coins. And so we're kind of the first system that actually really works. You know, the reason why we work is we're, you know, using traditional you know, elastic money supply concepts that have been time tested for a long time and that everyone trusts. And so being kind of this first mover, we build a network effect and a first mover advantage around our brand. You know, the Basecoin brand, the Basecoin team. And the same thing that propels Bitcoin to being kind of this universal currency, we think works for us as well. It's also, you know, it's very difficult to build Basecoin. The talent you need is very scarce, so I think that's another competitive advantage that we leverage.
So for us, you know, today, if you try to build a social network, good luck, right? Because getting anyone off of either Facebook or Snapchat or LinkedIn is virtually impossible. And so what we're going to be doing is we're going to be launching a token in January. We're going to be actually giving nearly all of it away to the community and to our users for signing up. And so it's essentially free tokens. And what we're hoping to do with that is, you know, there's been a lot of sort of a little bit more theoretical discussion around how a token can be used to create stickiness and incentives within a network. And we're actually trying that out. So I think if it works, then it's a game change for potentially the entire industry and maybe tech more broadly. in terms of using tokenization in order to build your own network effect and potentially break incumbent network effects. So I think that's pretty exciting. And then, the sort of other part of that is, within this community, all of us in this room, we're all very excited about cryptocurrency. But one thing which I think we have to recognize is that 10 years after the advent of Bitcoin, by optimistic estimates, there's maybe about 30 million people who have some amount of cryptocurrency, right? And internet terms is actually really not great. I think Facebook after 10 years had about 1 billion users, and here we are with 30 million users, and we're patting ourselves on the back. And so what we hope to do is, by allowing people to earn it, if you can reply to an email and get a little bit of Bitcoin, now there's potentially 4 billion people out there who can get a little bit of cryptocurrency, right? And once you have that sort of broader adoption, then there's enough of that more global network effect for the entire industry that allows us to build more interesting applications and build and sort of realize all of the many use cases we've all sort of been imagining for decentralized apps and sort of decentralized communities.
Yep. So I think for me personally and Hobby, we share the same vision, which is we're going to devote all our efforts into the blockchain space. From there, I would say exchange is just the beginning. Actually, I mean, we have a we have a more sort of business lines, around the crypto space or blockchain space. We're not only going to build the exchange, but further, we're going to provide more sort of in China. We provide more information as for media sites, and also we provide the wallet services. And also, we just recently launched the partnership with SBI, which is the sort of the biggest conglomerates in Japan. We're going to build the localized business in Japan to serve, to serve the local business. Yep. With that, I'll hand back to Michael.
Cool. Those are some great answers, and I think all the projects on this panel are really interesting, and I hope all of you get a chance to talk to the panelists afterwards. Do we have time for questions from the audience? Oh. Okay. Okay. So apologies, no questions, but please find us afterwards. Thanks.
So much. It's a great panel. All right, thank you very much. Next up, we have a keynote from Eric Meltzer. He's a general partner at In Blockchain Capital. So Eric, if you could come to the stage, please.